Hello and welcome to this webinar, the second in our Prepping for Venture Capital series with Geeks and Experts. And we are excited to be covering pitch decks today. I'm your moderator, Jenny Alton from the New York Small Business Development Center Central Office. Your presenters today will be Joy Jing, freelance designer and creative who came to that position after years with a venture capital firm. And then we also, of course, have Sneha back, Sneha Saigal, who is the co-founder and CEO of Geeks and Experts. This webinar is brought to you by the New York Small Business Development Center network of 20 campus-based centers and many more outreach offices located across New York State, along with a central office based in Albany. The NYSBDC is a U.S. Small Business Administration resource partner. Our free advising, education, research, and advocacy services are made possible by funding from the SBA, New York State, and our host campuses. So you know, we are recording this session today, and we will share a link to the recording with attendees in the next few days in a follow-up email. You will also be able to request today's slides through a form that we will put in the chat, so that will be available to you as well. Attendees are muted and will not be on camera. If you have any questions during the presentation, we invite you to drop those in the Q&A box as they come up. You can open Zoom's Q&A box from the Q&A button at the bottom of your Zoom window. Joy will take a pause partway through her session to answer some questions, and then after that, she'll be using the chat for some interactive activities today, which I am excited to see what she has planned for us. It sounds like it should be good fun. So with that, I will turn the time over to Sneha.
Thank you so much for the introduction, Jenny. It is so lovely to be back here. Hey, everyone. Happy Thursday afternoon. Sneha here from Geeks and Experts. We are so excited to bring the second workshop to you, which is on pitching and pitch decks for venture capital funding. If you missed our previous webinar on public relations and pitching to media and the journalists, check that out in our resources, and excited to kick this off with Joy today. And to tell you a little bit more about Geeks and Experts, we are a fractional talent platform. We have impact-driven talent for startups and scale-ups across industries, from fintech to cybersecurity to pet tech, across the stages as well. So from seed to Series A. And what we love to do is connect with founders who are looking for fractional experts without breaking the bank to achieve their business goals. And you can reach out to us if you're ever looking for experts in different domains, from pitching to media journalists, and to pitch to venture capital as well. Like Joy is an expert in our domain. So thank you again for joining us, and would love to pass it over to Joy now, who is going to take us through the best practices in pitch decks.
Hi, everyone. I'm Joy. I'm super excited. I'm also fairly casual and open. So if you have any questions, feel free to ask in the chat or Q&A. I want this session to be pretty interactive, so I'll be asking questions. You're welcome to give your input and comments through the platform. So without further ado, first going to introduce who I am. And as you see me here, my name is Joy. I come from design background. So in the past 5+ years, I've been working in VC, which stands for venture capital, and accelerators, which can be like VC, taking equity in exchange for cash, or just free money, grants and etc. And they're a little bit earlier than VC, so accelerators the form. And then in the past 6+ years, I've been working directly with founders, usually in the early stages. I thrive in the early stage area just because I love getting my hands dirty in different kind of work, and a company's most malleable and able to pivot when it's in the early stages. So if you're someone in that zone, talk to me. If you're someone in the later areas, for example, you've raised a Series B or beyond, great for you, and you'll need additional expert help. So that's my expertise. And then within that, what I usually engage with founders is across digital and print marketing. That can mean through social media channels, or that can mean like actual mailing posts and additional channels. pitch deck design, which is what we're talking about today, and branding and rebranding, also super important. Event planning and hosting. I love meeting people. I love making events work and run smoothly. And then lastly but not least, public speaking. So this is kind of my areas of expertise, and we'll be happy to chat if any of that sounds interesting or useful to you. Okay. So for today, here is a list of content that I want to walk through with you. And there will be time at the end for general Q&A if anything is confusing or you want additional takes on that. But first, we're going to dive in on knowing your funders and audience. Given that I'm assuming this attendee list is pretty diverse, you all might be in different industries, stages, experiences, etc. It's really important to know who can actually fund your business and then how to talk to each of those individual people. So that's the first part. And then I'm going to pause at the end of that section to allow any questions related to just that section. And then my second part is going to be talking about what's in a pitch deck. If this is new to you, this will be a great intro coverage on what to expect when someone asks, hey, can I have your pitch deck? Like, can you send me a deck, please? And then I'll share briefly on the best practices and tips. And then we'll actually do a live walkthrough of some pitch decks I found online that are all, amazing decks, all above average. And it would be really good to just walk through, and you can, hear my internal thought processes. I will get input from you guys on what you think of the pitch decks, and you get to be in the judge's seat a little bit. And I'll see, how y'all are thinking and feeling about all those slides. Okay, so first part of the session, we're going to talk about potential funders. So I roughly listed this into 4 categories as evident in the bubbles. The first one is what most people, vast majority of people will be most familiar with. Those are banks and traditional lenders. So anyone you do business with, anyone you have a bank account with, also gives out loans. And a lot of them also gives out business loans. And you know what? I'm assuming a lot of the small business owners here have applied for a loan sometime in your past experience. So that's something that you guys are probably very familiar with. What about the other 3? So angel investors, venture capitalists, and other avenues I'll talk a little bit more through. But let's dive in one by one so you get the understanding of who else is there to fund your business adventure as you pitch and dive in and go fundraise and achieve your dreams. So the first group I want to take a look at is angel investors. These people usually are pretty high profile, or they're very well known within the investing industries. So, for example, Mark Cuban, y'all know him as the Shark Tank guy. And then a few other I've listed, maybe less well known publicly, but still pretty well known in the world of investing. Who are they usually? They are usually high net worth individuals, and they like to fund startups, often in early stages, in exchange for equity. What does equity mean? It means a stake of ownership. So when they give you money, they actually get a percentage of your the ownership of your business. So that's like it's tit for tat. Like they get ownership and they give you money. And then because these are individual people, they're usually investing out of their own pocket. So as a result, unless you're a billionaire and you can put in a lot of money to different things, which there are people who do that, most often angel investors write smaller checks than people who run VC firms because it's just their own money that they're investing out of. Usually it's a lot of passion projects. If someone is really passionate about something, they will write checks to companies that do those things. So that's how angels work. And usually angels either write checks of their own. Sometimes they also run VC firms, but other times, as you see on the right side, Launchpad Venture Groups and Golden Seeds are 2 of just the many, many examples of angel groups. So what are angel groups? They are literally an organization, a group of people who are all angel investors, and they congregate and they say, hey, let's take a look at deals together. What are deals? Deals are basically like startups or companies looking to get funding. So like, hey, let's look at deals together and see, is this something that you're interested in investing in? Sometimes they write checks together. Sometimes they form a syndicate, but most often they gather because they want to hear who's looking for funding and who they can support. So you'll find either individuals within the group or the group overall might write you a check to fund your first stages. And angel investors come usually the earliest. So the way we think about fundraising is, if I'm starting a business with Sneha, and we would first do a friends and family round. So literally we would go to our friends, we would hit up Jenny, we'll be like, hey, can you give us some money? And that's the most informal round, right? Your own personal capital, your friends and family. And then you probably will lead an angel round. And angels are basically people who are early believers in your idea. And those are the people that you can go to get money. Okay, second group. So now you've got some angel money. The next group of people you usually hit up if your business is a bit bigger, you want more money, are venture capitalists. So these, and you see logos here, right, instead of individual people's photos, because these are firms, these are companies that actually their whole job is just writing checks. They're not necessarily participating in a Shark Tank or doing their own things, but it's really their day job to just write checks. So they usually manage money, not of just their own, but also from other people. So this means if Sneha and I are running a VC firm, we're going to fundraise first to just get a big pool of money. Maybe we'll raise $100 million or something like that. And then we'll write checks from that pool of money. So as a result, we invest in companies that have high growth potentials, right? If you think about it, you deposit money in a savings account to get interest on that investment, or you invest in the stock market, and your job is to get, not your job, your hope is to get some returns from that investment. So it's the same thing for these people, because their job is to return that investment that they have borrowed from other people who funded, the VC firm. And so then if Sneha and I are running a VC firm, then our job is to literally return the cash that we borrowed with interest and with returns. And so if you are pitching to VCs, if you put yourself in their shoes, that means you should expect, or at least project, a really high return on investment. That's the biggest reason they write a check in you, right? It's not necessarily their passion project, not necessarily because they like you as a person, although that helps a lot if they like you as a person, but it's because they usually believe that this business that you're having is really viable, is high growth, it will return their capital 10x or more. And this is how they become successful. And so all the logos you see here are really successful VC firms that have done really well. And I would recommend looking at the things that they've done. And the one advice here is that I would make sure you remember to check the stage and the industry of the VC. Stage means how early or late they invest. Some VCs don't really invest in either late or early or late stages. Some will invest across time. And then industry is also another big factor to look at, because a lot of times VCs have very specific categories they invest in. They will not invest outside of what they're comfortable or what they know. So don't waste your time, just double check. And if you think someone is interesting, and you have the bandwidth, doesn't hurt to reach out, but just make sure that majority of what you're sending out are very well matched in what you're doing. So you're not wasting your time by reaching out to a specific firm. So that's the big category of VCs. So you can talk to them as early as you want, but definitely talk to them when you have raised, some money, a little bit to start off, and have a minimal viable product, and just are able to show that you have a business and you're financially viable. That's VCs. And that's a big group, and a lot of different names float around in this area. Next one, we're talking about banks. So this, as I alluded to, you're already familiar with. Everyone listed here do business loans. And these are not equity investors. These are usually debt investors. Although I'm sure that as financial instruments mature and evolve, there may be other really cool vehicles that you might get a loan from that might not be purely debt driven, but definitely check the terms and conditions and make sure you know what you're getting into. Usually, because these are banks and more traditional institutions, they require a very strong financial statement, and they basically say hey, what's your revenue, what's your profit margin, are your income stable and consistent over time, what's your customer base. They want a lot more numbers and forecasts than a VC might require, just because they expect this to be paid back at some point. and they're less risk taking and more risk averse than the other two categories I just talked about. But they're always there. So if you do need money, like this is a very stable group to go to. And provided that you are able to show that you are financially viable, so they don't have a bad loan on their hand. So that's a third group everyone has some familiarity with. The last group I call other actually has a ton of different categories, and I want to briefly walk through this so you guys also know where else you can go to get money. But I won't be focusing on this because it's like something that's like I think out there, and definitely a choose your own adventure kind of thing. So for those of you either in university, just graduated, or still have really strong ties to universities and educational institutions, there's usually grants and competitions coming out of university labs. These are actually the first places where a lot of companies are formed. And the best thing is they don't require anything. They're not equity, they're not debt. They just give you a big check, and then you post for photos. It's great. Like, I think anyone who's still has ties in a law and the universities allow alumni participation and competition, I would say, check out those local competitions, university sponsored labs, really helpful cash. Second group, accelerators and incubators. I used to work at Mass Challenge. I love the place. I would say, this group is very early on in your business journey. Usually if you have an idea, you go to an incubator to get that first initial kind of work period to just work on your idea. Accelerator comes usually a little bit after incubator. So it's when you already have an idea, you have a bit of business, you're actually running it, testing it a little bit. You might be looking for a co-founder. You probably is just a team of one or two, but you are working on that first product that you're selling or service that you're selling. And a lot of them are no equity. A lot of them just let you literally participate, and they give you a lot of connections, mentorship, money or office space, a lot of benefits, no drawbacks, and make sure you take advantage of those programs while you're there, because when you leave, then it's really you're on your own. So I would say if you're in those programs, be there, live the days. It's really helpful. Third category, grants and SBIRs. This is for usually from governmental agencies. So I have here SBA, US SBA does SBIR, SCTR grants. These are great. The only drawback I would say is you have to go through a lengthy application process, and usually you have to provide a lot more write-ups and stuff like that. But the good thing is, it is a grant. There's no strings attached. If you can get it, it's pretty great. It's free money. Fourth item there, crowdfunding. So I would say crowdfunding is a more recent vehicle, and I'm not talking about GoFundMe or Kickstarters, although Kickstarters are also really good for launching a business. What I mean by crowdfunding is more places like Start Engine, where you are a business, and usually startups use it too. You pitch, you put your company there, and then people actually buy a share in your business. So it's not necessarily Kickstarters or people fund that kind of product launch, but it's people actually own a tiny stake in your company, and then they give you money in exchange. So that's crowdfunding. It can be difficult, I would say, to manage those investor relationships, given that there'll be a ton of investors who crowdfund into your business. But if your product is very popular and is tangible, people can see it, can feel it, can imagine how they would interact with it, that does make a difference. Crowdfunding is a pretty good way to go as well. And lastly, if your business is pretty big, instead of VCs, you might look into PEs, which is private equity. And that's something I have less familiarity with personally, but it's also a route in which if you want an acquisition, if you want to buy out, private equity, big firms are the places you might go to fund an exit. So that's kind of the other routes that, out there. And in summary, I want to just say, when you are looking at these groups of people who might give you cash, who you are pitching into, you want to think about three things. So first one is what we just talked about, which is, understanding their needs and preferences. Everyone has very specific interest and then investment criteria. So just make sure you do your homework before you go in and is reaching out and pitching, and just, make sure you're aligned with them. And then second one is, for VCs, right? In particular, the group that I've been in for a while, they're really looking for scalability. So they're looking to say, hey, like if you take my money today, can you give me like 10x back 5 or 6 years down the road? Like that's the kind of thing they're looking for. So as a result, they actually favor more tech-enabled startup. What does that mean? That means companies that are not like hugely capitally intensive upfront. And that, for example, if it's a software, right, you can install a software on your computer and you don't need someone to like physically come here, like do work on your house and do stuff like that, but you can just install a software and use it and then pay subscription fee. So that's like very scalable in the eyes of VCs. And they say, oh, okay, so if you have minimal costs, then, you can grow very fast. So that's a goal that they might have. Whereas for banks, right, they might not care or want even scalability. They might say, hey, for every unit sold, what is your profit margin? What's your return on that particular unit of product, right? So they want a steady return. And so that's more of your unit economics than I would say, go with a, more traditional lender and less with a VC, which actually sometimes might be happy to see that you have debt, you have like a negative return because you're scaling so fast in the early years. So that's kind of the difference and nuance between different groups. And lastly, as you're pitching, just make sure that you are tailoring your presentations to the specific types. And I would say, to just be prepared, you can definitely have one master presentation and then just know that, when you're presenting, what to emphasize. And then I would, prep specific slides in response to things that you might anticipate that them asking and address those needs up front. So that's what I would say things to look out for these main 3 groups of people. Okay,
I would also add, Joy, for the specifically for the venture capital, the angel investors, I think a strategy not to underestimate is like warm intros and also just asking for advice or reaching out to them with that intention of like, hey, I just want to connect with you to get some advice, because that's the best way to get your foot in the door, understand what the investor's investment thesis is, and then you can use that as an entry point to tailor your presentation. So do a lot of that homework, reach out to other founders who they have invested in, get that homework done from your end, so you're fully prepared with kind of questions they ask, what kind of businesses they've invested, what is the value they bring, because I think that's a big fit that you need to focus on when you're picking the right investors, because they should come with the money, but they should also come with a lot of other resources that they'll add value to your business for.
Cool. And then I'm going to pause for a few minutes here just for questions specifically for this section, because the next section, we're going to be looking at pitch deck specifically. So I just want to answer funder questions now. Yeah.
So we have a great question. How does the investment landscape or approach to obtain financing differ between product-based and tech businesses and then service-related businesses? And I know you touched on this a little bit, but if you could go into a bit more detail on that, we would appreciate it.
Yeah, absolutely. So I would say for product and service-based businesses, I think the divide is more tech-enabled versus non-tech enabled. And what I mean by that, if you're a franchisee, if you're selling in a physical store with actual products, a better approach might actually be going on Shark Tank, right? Because you want that virality, you want people to immediately see and use your product. So that's kind of the thing that I would say go there. And also you can probably more easily get a loan from banks, because you can say, my profit margin is 20% because this is my cost and this is my sales and this is my other costs. So like, that's what I would say would be easier. But let's say that you're, instead of selling a physical, let's say, item, like I have a mug next to me, sometimes I'll say mugs, right? Like instead of, selling a physical mug in which, you can just put in stores, you're saying, hey, I'm actually selling a service, or like I'm selling a software that, what's a good software? Let's say Adobe, right? Adobe and Figma and Canva, and which is the platform I'm using, they're actually a service that combines design and technology. Then that's something you can actually pitch to VCs. So that can be both a product, but also the service that add on to it. Usually service comes with a product. So like Apple, the most famous example, right, sells hardware, but the software is actually, and maintenance and tech support is actually where they make their money. And very good scalability. VCs should and would invest in those categories, even if at times unit economics of that particular physical product might not make sense.
Thank you. And so a follow-up question that someone has, what if our business is a business-to-business service? Any advice there?
That's great. I mean, B2Bs are really hot these days. I would say if you're a B2B firm, definitely look to VCs and angels and other channels I just discussed. B2B services scale easily, more easily than B2Cs, because usually the amount per like sales agreement is much bigger, and you don't have as much CAC, customer acquisition cost, the way you would traditionally have with just physical products and consumer products. So B2B is more favored generally by VCs and B2C. However, the caveat is there are consumer-focused VC firms that actually specializes in consumer goods. But generally, B2B have a good rap. So I would say go for it.
Fantastic. Well, that takes care of the questions that we've had so far. So we can hit some more after your demonstration.
Okay, perfect. Well, thank you all for being so engaged. I'm gonna go into the second part of the presentation, which actually covers like what is in a pitch deck. So this conversation happens if when you reach out, right? As Sneha said, you might reach out to a VC for like, hey, I want some advice. I will see you on an event, et cetera, et cetera. They say, okay, cool. Like, after they ask you what you do, they might say, okay, great, send me a pitch deck. Or like, if you want to pitch them, if you do want to do a cold outreach, which I would recommend after warm leads and warm outreaches, they might say, hey, send me a deck, we'll talk after. The purpose of a pitch deck usually is to get you to that first call or first meeting. And this is like what is usually in a pitch deck. So I've divided into two columns. There's really no hard differentiations. The reason I divided this is because I want you to think about the first column as kind of like the core skeleton of what the pitch deck should deliver on. So what does this mean? This means like you have a cover slide, you state what the problem in the market is today, right? So like, what is the problem that you're trying to solve? Is there a problem? And then what is the solution that you're offering? And then with the solution, like what's your business model? Like how are you making money? How are you making sure that the solution is actually being used and met and meets the needs of your customers? Who is doing this? Like who are you? Who's your team? You might want to send some like financial data if you're comfortable with that. More so for traditional lenders than not. And then the last page of thank you or contact sheets. So like this is at the core, like really essential slides. And this is kind of like the segments that you will go through in the pitch deck. And I would say, like there's variations on those, but this is like at the minimum what your slide deck should cover. On the right side are more specialty slides that VCs in particular look for. And I am, less familiar with like bank loans and stuff like that, but I do know that these slides are also really needed in a pitch deck if it applies to your business. So what are those slides? So the first one is market size. Market size is basically convincing VCs that your problem, that the problem you're going to is big enough, right? Because we just talked about returns. So they want a huge return on their investment. And the return cannot be large if the market size is really small. So this is basically making sure that you're solving a problem worth solving. And so that your market is big enough, there's enough customers in that market to pay for your services. Competition. Very, I think, self-explanatory, like who else is in the market? Why are you better? Are you fulfilling a niche? Are you the best, the first, the last? Like, who are you in comparison to your competition? Why now? This is more of a like timely question, right? So some problems might be like ages old, like it's just the professional problems. Everyone know the healthcare system is broken, for example. So why now? Like, why is now the best time to do what you're doing? Is it because of new legislation? Is it because of a tax break? Is it because of new technology? Is it because you just met 5 people who said they'll invest in you? Like why now specifically? And this slide also helps drive the urgency for what you're trying to build and to convince investors to invest and invest now. Go to market strategy. This is like kind of a industry lingo, but what this means is how do you bring your product to market? And by the market, I mean users. So as you're building the product in the early stages, how are you acquiring customers? How are you bringing awareness to it? How are you driving partnerships? Like just basically, how are you going to do the things that you're doing? It usually couples really well with the business model slide and tells about how you're going to implement the business model in the market. All right, traction. Traction is for businesses that have at least a MVP, minimal viable product. This slide basically convinces VCs you know what you're doing, because that shows that you already have some customers, some pilot projects going. It doesn't have to be a lot, but basically if you have momentum behind what you're building, you should show that and say, hey, like I've already have a group of testing, piloting customers. This is a viable thing, and assuages them that this is, not a huge risk, but just some risk. Timeline. So this slide shows your like roadmap, and sometimes it can be a product roadmap, but other times it can just be a roadmap of like, hires, expansion markets, just things that you're thinking about implementing the next coming month, quarters, years, etc. Tailor it to your business and how early or late or specific it is, but it's ideal. It's good for investors to think about, like, what is the time horizon on this return on investment. And lastly, the funding ask. So usually a very simple slide. The idea is like, how much are you asking? So usually the startup is raising like a round, right? So you're raising a seed round, a Series A round, you're asking for $1 million, 500K, like how much how much are you asking this one time? And the investors knows, like if I'm only writing a 50K check, or if I'm writing $1 million check, like how big of a percentage would I be in the round that you're raising? Am I the lead investor? Am I like one of the other investors that are joining the round, etc.? Just helps them anchor like about where they will be in the pool. So that's kind of like all the slides that are typical in a pitch deck. You don't have to hit every single one of these. It's very situation dependent, I would say. But it's just good to know when people ask about specific things, these are the slides to have in the back of your, both, in the presentation, but also in the back of your head to say like, oh, like which slide covers what concerns and questions, and fulfills which purpose. So that's the pitch deck. And then best practices. 4 things I would say are best practices. I mean, there are many, many best practices, but just 4 things I want to highlight. First thing is everything is storytelling. So at the very core, the pitch deck is a story. It's a story about your business. It's about what you're trying to do. We're trying to solve. How is it doing? How is it viable? Like, what's the future for it? So every single slide should tie to your main narrative, and it should flow a bit like a story and tells the viewer or the reader what the story, the background of your business is. So like everything storytelling, think about it as like a story narrative. Second thing is include a product demo if you can. This is by far not a requirement. Most slide decks don't have this, but if you do it, it will make your slide stand out, because this is when an investor or an audience can get a good feel for what this is. Even in the early stages, it's helpful to have a demo, because then people can contextualize it better in their head. That can be a video, that can be a GIF, that can be screenshots, that can be, anything else that is relevant to your business. But I would say including a demo will make you stand out. Third thing I'd say is most of the time, you guys are all business owners. You're in the weeds every single day. You do hard work, you do great work, and you're in the details a lot. And you might forget that a lot of the business jargons may be unfamiliar to investors who are, not super experts in your particular niche. So I would say if you do mention, words, define them, but also cut out the jargons and just keep the focus. Like, what is your story? Like, what are you trying to do? How do you show your business is viable? It's a good idea. Like show that first and foremost. And then if you have a lot of details, put it into an appendix or, explain it verbally as you're presenting. Last of the best practice I would say is to visualize your growth. This is especially if you have a lot of data. If you have numbers and they're up and toward the right, I would say present it in the form of a chart. It can be any chart. It can be line, pie, bar, whatever. But it's really helpful because we're all visual animals, and we like seeing things. So having a chart is immediately gratifying and would be helpful to your deck, and also varies the visualization a little bit, so it's really helpful. Those are best practices, and I want to say there are 3 more tips I want to also share with y'all. So the first thing is, I always do this when I work with a startup to build their pitch deck, which is I always do the narrative and content first before going to design. And this is really important to me as a designer, because the moment I start designing, I care about all the small details. I care about the font, the placement, the colors, the everything. And I just get lost and bogged down by it because I want everything to be perfect. And if you're not a design person, you might also relate, but also sometimes I know it's annoying to get all those small things correct. So I would say the first thing you should do is actually start a Google Doc or a Word or Notes, whatever, and write down like content. You should write down, the flow we just discussed in the last slide, like what do you want to cover in each of the sections, and then make sure that is ready before you go into design. It will save you a lot of headache, and also you should revise before you design it. The second thing is, what I found really helpful is that every business should have a killer one-liner that just states what your business is, and then the key differentiating factors or the value proposition. What does that do? That immediately tells your reader what it is. And if they can summarize your business in 1 sentence, that's powerful, because if they can't, then they usually forget, or it gets lost, or they get confused. And this one-liner does not have to cover everything, and it should not cover everything that your business does, but it should just really immediately highlight why this is important, or why this is the best, or the first, or whatever. It should just be really clear. It should be really clear for the readers what it is. And the third thing, the tip is that try to establish credibility via case studies or testimonials or partnerships. Especially in the earlier stages, and also I would say really important in the later stages too. But if you want that initial funding, having a cornerstone partner who can say I'm partnering with so and so, that's amazing, right? That gives you credibility as a owner, as a founder, to say this is a little bit of a tested idea because someone said yes to it, and that someone is reputable. Even if you don't have that cornerstone partnership or a big case study, use testimonials. If you have a pilot group of 5 customers and 2 of them or 3 of them gave you testimonies, great, incorporate them into your slide deck. And that at least shows enthusiastic customers. That would be, really, really helpful to people saying, have this idea been vetted? Are they reputable? Things like that. Okay. That's my quick second section. The next section is going to be live walkthrough. So before we get there, I just want to ask, does anyone have any questions about everything I just said in the last couple of minutes?
Yes. So this attendee would like to know, in what time frame should growth be discussed? Are we talking 6 to 12 months in the future, year by year, 3, 5 years? What is a good, idea of the time estimate?
Yeah, great question. So I think it more or less should mirror the time horizon you've had in the past as a business. What I mean by that, right? If you just started the business a year ago, then I would say think in quarters of month, quarters, and year, singular. I usually see people actually put their timelines in quarters or years. Sometimes also half a year or month if they're really new. So if you've been in business for 1 or 2 years, do month, quarters. If you've been in the business for 3 years and you're looking for additional funding, I would think about it more half year, and then just kind of mirror the past background, and then just say, in 2 years, in 3 years, what I hope to achieve. What you can also do is, if you have the timeline line on the top of the slide, you can then break it down into different time horizons. If you feel like your hiring is done on a monthly basis, but your product launch might be on a quarter basis, and your other things might be on a yearly basis, you can also break it down that way.
Thank you. And I want to remind everyone, I know some people weren't able to join until a little bit later, we have a link in the chat. So if you would like to get a copy of Joy's excellent slides that she's been sharing, go to that link and you will be able to request those. All right, so let's move on for now.
Perfect. Okay, so this is a more interactive portion. Please feel free to use the chat. I think it might just be us that can see it, so don't feel discouraged. We'll see everything that comes through the chat. So I'm going to walk through a couple slides I found online. Again, disclaimer, I have not worked on these amazing slides. I don't own them. I just found them online, and I thought it'd be really helpful for us to look at it together. So a few things to keep in mind before we go into them. So the first one is, right, what I've mentioned is the purpose of a slide deck is sales, right? So get you to that first call with an investor. It does not, get you money automatically. It also does not correlate directly with the product, but the idea is like you want to package your service or your product in a way that gets you on a call with that investor so you can pitch it live. The second thing is, this might be a little bit discouraging for people in the audience, but the average time that investors spend on a deck is actually measured in seconds, not minutes. Especially for a well-known investor, they get inundated with requests all day, every day. And so they usually spend like a minute or less under per slide that they get if someone's really busy, right? So think about how to be really clear. If someone is literally just like skimming, just scrolling continuously through a slide deck, is it clear? Like, can I glimpse the information in like 30 seconds? And if I'm interested, I would probably spend more time looking at it than 30 seconds. Usually people would spend minutes or like, tens of minutes after, like really deep diving into for an analysis. But the first meeting is like seconds. Third thing, something I just talked about, which is the slides that you'll see doesn't necessarily correlate with the product quality. It is a sales material. It is meant to portray it in a very positive light, so it gets interest and it gets bites on that. And then fourthly, I want to also say is the outcome of your particular fundraising and the fundraising of these companies that I'm about to show also depends significantly on external factors. It's not just like, what the deck shows, but also, who they are as founders. Have they already exited a company? Are they like well-known personalities in the media? What does the industry looks like, right? Right now, we all know that AI is really hot. So if you're an AI company, you probably will get more attention than other kind of companies right now. So it depends on your industry growth. If your industry is booming or if it's waning, that matters a lot. Investor availability, are there investors in your particular categories that are looking to give you money? And if there's a lot, great news. If there's not a lot, then you are looking at a more limited pool of funding. And lastly, macroeconomics. What's the market like? That matters a lot. For example, what's the interest rate? We all knew that a few years ago, interest rate was like near zero. And that's great because that's pretty much free money that people are investing in. But now interest rate is much higher, then it becomes a lot more expensive to invest. So that's a macroeconomic trend. How's the market doing? How's the jobs doing? Like just all the market forces that you can't unfortunately control as an individual. That also factors into your fundraising. So I don't want you guys to get discouraged. If it's not returning well, it doesn't speak ill of you, of your pitch deck. It might be a really good deck. It just not the right time, or it's been a really harsh market. So that's kind of the thing I want to prep you on before we go into a walkthrough. Okay, so exciting part. I am actually going to exit out of this slide and just to go into live deck. So the first thing I want to talk about is what can those slides look like? So we talked about this already, and I want to show you this presentation, which is called Lunchbox. And again, disclaimer, I don't own this, I have not designed this, I'm not affiliated with this website, I just found it. So I thought it'd be a good demonstrative purpose. Okay, so Lunchbox is a Series B company. What does that mean? That means this is a company that is already later stage. Later stage meaning they've grown to a lot of revenue, a lot of like investors, a lot of customers. So this means like a later stage, more established startup. Okay, so this is the reason I want to show you this one up front is because this slide does a really good job of having very clear slides. I'm going to show you how I look at it as a first-time investor. I'm literally just going to scroll, right? I'm going to scroll through, and this is like selective slides. It's not the entire deck. This is just really selective slides out of the entire deck. Why is this good? Because it's really clear what every slide is doing, right? This is like, I love this slide. I want you guys to look at this because this establishes ethos. of like they know their market and they know like what they're doing. They have done all their research into the kind of, sorry, so just back a little bit. The mission, they're an operating system for managing your restaurant's entire customer experience. This is the killer one-liner that everyone knows what they're doing. And this slide immediately establishes their, like, they have done their research, they know the market, they have all these restaurants that they're, interested in. And then every single slide, as I'm scrolling through, is really clear. So if I know I want to look at the problem slides, this is what they're solving for. They're solving for two problems. The one is like third-party companies are expensive and bad for restaurants. I'm literally reading verbatim because it's exactly the problem that they're hitting on. Second one, building your own ordering system like Sweetgreens is expensive and complex. Again, reading it off verbatim off the slide, I know immediately what they're solving for. This is super, super clear. Solutions, they spend a lot more, I would say, time, effort, and money probably on this one slide. And they give 3 things that they're doing that help solve those problems. Again, really killer visuals. I would bet this company, because it's a Series B company, has an in-house design team because they're using their custom visuals and a very strong brand identity that emerges from the slide. And then really good visual results, right? I just, I said visualize your growth and visualize your numbers. Like, this is really awesome. Like, I can see immediately that they're growing, that they're a big portion of their market. And given that this is a later stage company, they have a great case study slide that shows literally the before and after, and that gives you really huge font numbers on like just convincing you this is a tested, proven idea and business model. Okay, so if I were a first-time person looking at it, right, I would just be scrolling, and I might spend a few seconds on each slide, understanding what the slide is. Again, just from the limited slide that they've put on this website, I can already tell this is a proven business that seems to be doing well. If I were to invest, I would do a lot more due diligence on it. I would do a lot more digging and research. I would not invest based off of this one pitch deck. But for the purposes of pitch deck, it's incredibly clear they know what they're doing. So that's the first thing I want to show you. Like, this is a 10-10 slide. Like, really amazing visuals, amazing brand, super clear, knows what they're doing, and have the success story to show, to prove. So that's kind of the, the first thing I want to show you is just a really good, really clear deck. Second thing I want to show you is called Smalls. So this is their cover slide. And this one, instead of doing a one-liner, statement on the company, this one has a lot more comprehensive slides. So, we're not seeing the lunchbox full slide deck, but for Smalls, we're seeing the entirety of the slide deck. So this one actually much more comprehensive. And so as I'm scrolling through, I can see the whole picture being painted really, really well. And the way they're doing this is that they use every slide for one big idea, and then they break it into sections. So for example, the first section talks about the kind of the market and the problem. Love their use of charts, love their big, supported, reasonable and very cited, credible questions about, hey, like, these premium brands are not doing what they're saying they're doing. And also, like, hey, like, we're the only one in the market, like, super convincing, like, hey, like, if you were to ask me what cat foods brands are there, I would think like maybe Fancy Beast, because I see that in my grocery store aisle, but I don't own a cat. I haven't done the research, so I don't really know. But this is like, oh, like, they're like, the only thing out there that's like new and on the market. Gives me reasons to believe that this is a good market. But the why now section is really good. Why is that? They made this entire section about why specifically now. Because their growth is just taking off, and this is obviously removed because it's a publicly available slide, but they have numbers on like why this is just has taken off. And they're 10xing production again, a demo, super good, because people can click on it, look at it, be convinced that this is good. The team is really like seasoned. I would actually give feedback on this slide and say they should make this a bit more convincing. When they talk about team, I always recommend people of talking about their experience specifically. So I love that they have done logos of where their team members have been in the past. Really helpful. But they should also give their like previous titles, right? If I know, for example, that like the brand, like CEO of things, great. But I don't quite understand what brand at Dame or things, or like supply chain at Walmart or Jet really is. Are they the VP of supply chain? Are they like, like a supply chain manager? Like what exactly have they covered for Walmart and Jet, which are huge brands, right? Huge commerce giants. Like what exactly has that person done? What does merchandising mean in One Kings Lane, in Paperless Post? Like just obviously the team comes from really good backgrounds, but I just don't understand how seasoned they really are. Still having the logos there really helps. And I understand it's a diverse and qualified team. And the performance really great. They use more of a pop art-esque type of aesthetic, which I think goes well with the people that are pitching to, and really uses really good huge visuals to show their growth. And then some future plans. This slide, this deck, I think is aimed toward between like early and later, probably like a Series A raise, if I were to guess, because they already have Series A or beyond, given that they already have growth and they already have proven sales and stuff like that. But overall, this is one kind of deck that is thoughtful. And yeah, so targeted, so this is the future ask slide already. This is a huge round. So this is not see, this is series A or series B round. And this is what they're looking to raise and basically telling you, what they're looking to do with it. Overall, really solid deck, 11 out of 10 on this one. And this is something that I think companies should strive to emulate. Also would say this takes a team, either in-house designers or an agency to do it. Given they have custom branding, graphic, and aesthetic. So that's kind of love this deck, would recommend. Want to take a look at this one. So the past two, so this one is the most tangible, right? This is like cat food, something that you can not taste, you can feel, you can see in person, in real life, physically. This is a little bit more like, more abstract, but still pretty tangible because it's like about restaurants. The next one I'll show you, Super List. This is a not tangible. So we're going into more abstract land of a software. So someone asked earlier about software, product, service, etc. This is a pitch deck, which I actually have more critique than praises for, even though it's also a really good deck, very solid deck. So Super List. This one, the one-liner is made for teams, designed for people. Okay, interesting. I still don't know what it does, but I guess I understand it's some kind of software that's for teams. This is a story. This deck has really good storytelling, so I actually would commend on this way that they storytell. And the reason is, if I'm scrolling through, I can read immediately from slide to slide what the story is, because every deck is like a sentence in that news story, and I really enjoy that because I can understand what they're doing. For a specific critique, I would say, for example, right, in this slide, they say task and project management has mostly been unchanged. But immediately I think of Asana, because in my past work, I've used Asana. So I actually would be like, I don't know, I think they forgot Asana here. But I would have that question in my head as I go into the slide deck to say, how do they compare to the market leader, one of the market leaders in this particular category on productivity and managing your teamwork, right? And then they dive into it in this slide, which is like they list all the actual competitors: Asana, Monday, Jira, and Plenio, which is good, but I actually don't quite understand how they compare on different features, on different criteria. And I also think they can do better with talking about their specific products, advantages, maybe having a demo. They don't quite talk more about how their product works. So I would say this is a like earlier round where they're still building the product and they have a good idea and have like a team, but they don't necessarily have the thing to show for it. Or it might be that they didn't make this slide publicly available on this website. But I would say for a deck that is really good at telling stories on how they have evolved their idea and thinking to actually show the product in use, and that way give me, the investor, peace of mind that, oh, like this is actually usable, doable, and is user-friendly. So that's our biggest advantage that they have cited. So that's Superlist. Want to do one more, which is linear. If I run out of time, just quickly touching on this one. This is an improvement on what I think Superlist pitch deck is. I will leave it to you to figure out why this is an improvement, but I would say this is a much better deck in that it provides many more details, specific reasoning, and really like gives me like insights and peace of mind that this actually has a lot of buy-in, a lot of user-friendly like features, and are thoughtful and available. So I would say this is a big improvement on Superlist. And lastly, just very briefly, I want to show a different kind of pitch deck, which is for very abstract ideas, NFTs, right? Very, very abstract. What the pitch deck might look like might be very different and might be very foreign to people here, but just showing you the variety that can have in the land of creating pitch decks. Okay. With that, I know we rushed through the last bit, but the deck is available for you to have afterwards. I'm going to give the stage back to Jenny.
Yeah, so Joy, I know you had mentioned wanting some feedback from our attendees today. Did you have any questions that you wanted their input on from those slides that you'd been showing?
Oh, I just, like anything, comments, feedback you have is helpful, but nothing specifically from me.
Okay, yeah. So if you have thoughts about those slide decks, feel free to enter those in the chat. We're curious what you're learning today and what your takeaways are for today, so that we can better know maybe what's on the minds of our business owners who are looking at creating these decks. So that last deck that you brought up, it looked like it had a bit of humor in it. And so this attendee had a question on, do you have any thoughts on using humor in a pitch deck for attention-grabbing value?
Oh, I definitely think humor, if used well, can be really useful and very helpful. The only thing I would caution is just make sure the humor does not degrade anyone or any group, and it should be a tasteful way of doing humor. And I think if done well, definitely memorable. Yeah.
Thank you. And so I know we have people on the call today who have never looked at creating a pitch deck before. This is brand new territory for them. Where would you recommend that they start? Like, how do I start this process if I want to go down this road? I have the idea, I have the business. I want to start this process. Where do I start?
Great question. The first thing I would say is to start on a document, text-based document, and write down what is it that you want to say. Workshop that first, and then choose a tool you're comfortable with. So personally, that's Canva, but that could be Google Slides, that can be PowerPoint, that can be Keynotes, whatever you're comfortable with, start there. But I think the most important thing is getting your story right, getting your narrative right, and then plugging that into a visual format.
Yeah, I would also add, you can use like the business model canvas, you can use a SWOT analysis, get your strengths, weaknesses, opportunities, threats for your existing business. It'll just help put in all the different pieces, and then you can make it into a pretty deck, like just the way Joy has presented here. But getting the meat and the substance is more important first.
So question, and this is a great question. So for business owners, for instance, do you ladies provide that step-by-step kind of service help for creating pitch decks if someone wants to go down this road but does not feel that they can create this themselves?
Totally. So this is why Sneha and I are here, is because I met Sneha and she's like, hey, like we have this platform called Geeks and Expert. And I was like, oh, cool, I can provide pitch deck help. So yes, there are definitely people. I'm one of them. And if you are interested, the first call with me is always free. We'll just talk for 30 minutes and, I will learn more about what you're working on and give you feedback if you already have a pitch deck. And if not, we'll think about how to build one, and then we can work more. But you're welcome to check out Geeks and Expert, and you can book me there, or I have my LinkedIn link as well. And, we're always happy to chat to owners and founders.
Thank you.
Yeah, absolutely. I second what Joy said. Just feel free to reach out to us. There's no harm getting, an initial chat just to understand where you're at, because we can guide you better based on what's a good resource for you from there.
Right. And a great way, if you are interested in getting in touch with Sneha and Joy, there is that link in the chat for the presentation slides. So that will get you in touch with them, and they will be able to email the slides to you. And if you have any further questions, you can follow up with them. Okay. And do we have time for one last question, ladies? I know we're like...
I'll be here. Y'all are welcome
Okay.
to...
Okay, great. Well, we'll sneak in one more question, and I will answer something else really quick. There was a question that someone had some difficulties with Zoom. There will indeed be a recording available. We'll send out a link in a follow-up email in the next few days. So if you got on late or had difficulties with Zoom, we've got you covered. We'll get you that recording right away. Okay, so last question for today then. How early stage in your business should you start with a pitch deck?
Yeah, so as soon as you are pitching, like you want to get funding from someone. So I would say there's different kinds of pitch deck for investors versus customers. If you're selling, right, you're probably getting a customer brochure or a customer like fact sheet or one pager. That's for your customers. But if you want to get funding from all the kinds of investors we just talked about today, then as soon as you want to talk to them, start working on that, because they will ask for this somewhere in the beginning stages of your conversation.
Yeah, I would say even if you're at an idea stage, a lot of investors want to invest very early on. So if you think your business is venture backable and you want to speak to investors early on, even if you have an idea, you have a proof of concept, you've spoken to customers, done some customer discovery, you can start out with that. It really depends on, you know, the idea, the stage you're at, and if you think you want to raise funding, like Joy said.
And so again, would that come back to that research then of kind of understanding which firms might be willing to invest in an idea versus, you know, an already developed product? How would that work?
Sorry?
Oh, I was just saying, so would that come somewhat if you were, you know, looking at very early on, back to that research of what firms are willing to invest like in an idea versus something already developed?
Even if you have an idea, a lot of times people are pitching on idea for pre-seed angels, etc. I would just articulate the idea as much as you can and convince the people that this market is growing and it's large enough, because people want to solve a big problem and not a small problem. That's usually how investors think. So if your problem is timely enough, urgent enough, big enough, like that's good.
Yeah, and I think in terms of, you know, putting a pitch deck together, it helps you also understand what is your business, what is the problem statement. So Joy worked at Mass Challenge before this. I went through Techstars with Geeks and Experts, and we both are familiar with, even at that stage when you're early, you don't have revenue, the pitch deck will help you get your narrative together. So it is a tool that you can use to get from one stage to the other, because it's always going to be evolving. So at the idea stage, you're just talking, you know, early stage, high level stuff. But when you go to the next stage, you're going to talk about growth, opportunities. So think of it as a fluid model that's changing as you go.
Thank you. Oh, we had one last good question come in right as we were doing this. Is it okay to do one more?
Yep.
Okay, great. So this person wanted to know some more about, you know, are there any specific business models that work well with creating a pitch deck? And how would you define, like, let's say you're a minority-owned business or a woman-owned business, you know, how might that affect your pitch deck and what you might present?
Ooh, I love that. So it is hard. It's harder for women and minority founders, owners that are to get funding. I will not, you know, sugarcoat that. However, there are investors and groups looking to fund specifically in those categories. So definitely look out for those type of investors and groups. I would say, you know, I would highlight how if your product is relevant to your experience, definitely highlight that upfront. I will talk about one example I've seen is that someone created a black hair product that's like specifically for African American hair that's like tightly coiled, and it's like a product specifically for that type of hair. And this was driven specifically by her need for that hair product, and she just couldn't find it on market, right? So if that's your business, then definitely market that, because you personally have had that problem. And I would say in that case, move your team slash founder story up front to say, hey, like I've encountered this firsthand. I know there are other women, Black women, just cannot find this hair product. Like I created one and I'm here to market it. So like that's relevant, market that. And I've, helped that founder with actually her pitch deck too. So just like talking about that problem. In terms of business models, I would say, yeah, well, if your business right now does not make a profit margin, but you have ambitions for scaling, talk about that. But if it's already profit, like it's like cash flow positive, then that's even more attractive. So like I would say, depending on what kind of model you're going for, if you're looking for unit economics, just revenue is greater than cost always, amazing. But if that's not the case and you need an upfront capital like injection, then say like I want to scale this. And this is my grand vision. Are you in this vision or not? If you're buying into this vision, then you're looking at more returns down the road. So that's how I would package it. Yeah.
Did you have anything to add to that, Sneha?
Yeah, I was going to say in terms of when you're getting established as a minority or a women-owned business, it's great to get that certification, but I would not necessarily lead with that. I would just also tap into communities that maybe are adjacent or, that bring value specifically to those groups. There are a lot of grants, there are a lot of networks and forums of founders where you can actually enter, because you're minority business owner or you're women business owner. So I would use that as a way to get into those networks and connect with other founders, but not necessarily something that you want to just highlight for the sake of it. But yeah, in addition to what Joy said, I think those are great points about it. If it makes sense, you can highlight those aspects.
Fantastic. Thank you for being so generous with your time and letting us go a little bit over for some extra questions today. I really appreciate both of you. Joy, fantastic presentation. Thank you, Sneha, for contributing extra expertise as well to this. You ladies are incredibly knowledgeable on this topic, and we appreciate you so much sharing this with our audience today. So there are thank yous coming in the chat and the Q&A box if you want to take a glance at those, ladies. And I will remind people, you will get a copy of this recording. It will come to your inbox within the next few days. Also, before we go, if you want those slides that Joy has been sharing today, make sure that you click on that link. It's a Jotform link in the chat right now so that you can get that open and get those slides for future reference. Also, we do have an evaluation that will show as we shut down the webinar today. If you have a few minutes to give us some feedback and let us know how you thought today's webinar went and also how we can continue to help you in the future. We love hearing from business owners and what's on their minds and what we can help them with. So again, thank you to everyone. And Joy, Sneha, any last words?
Oh, good.
No, absolutely. This was great. It was so lovely to connect with everyone. Thank you, Jenny and SBDC for this opportunity. We love connecting with founders. Feel free to reach out to Joy, me, and somebody asked about the slides from last week. Happy to share those as well. So feed in your email ID and we'll send both the slides. So you'll get this and last week's presentation.
Yes, yeah. Thank you all for being so engaging. Love that.